Well, good evening traders. Thanks for joining me on this Monday afternoon market recap. What I'll do is take a look at the three US indices and just talk about where this market's heading for the remainder of the week. We'll begin with the Dow Jones Industrial Average, and for those of you who are in our Pivot Point Pro class, you can see the two triggers which we have set up on the overall market. We've got a bullish trigger here at 16,665 on the Dow Jones Industrial Average, and we also have what we call a bidirectional setup if in fact the market decides to roll over at this resistance level and trade down below 16,050 points. As you can see, we're pretty neutral on the overall market. The candlestick we did see today is what we call a hangman candlestick. Now this candlestick in and of itself is what we call an early reversal candlestick pattern, and it is occurring at the right location. What we do expect for this market to happen, at least for this week, is to actually slow down around this resistance level right here. As you can see, to begin the year, if in January we did bump ahead into this resistance level right around 16,500 before we did get that initial phase of that selling pressure coming in, which sold the market off in a nice little retracement down to these lower levels around 15,430. Now, although at the moment I do not think this market has the potential to actually roll over, I do think we are going to set up some form of a little bit of a continuation or a consolidation pattern right around this level until we break higher, much like the S&P and also, the NASDAQ markets. As you can see, they are leading the Dow Jones Industrial Average. What we're waiting for are for three markets to be in agreement according to Dow theory, and that is going to, of course, confirm once we break above 16,665. That's the basic price analysis. If we're just using price, let's switch to some other additional indicators just so we can speak about this market in a little bit more detail. Now, the moving averages are not really giving us too many compelling signals. Again, the moving average cross, which was established in February, won't actually confirm until we break above old resistance levels. The simple moving averages are still quite bullish at the moment. You can see during that retracement in January, we did just sell off to that 200 and that very nice support level before we got that new bounce. Now, at the moment, we are entering into, or we are in the period of overbought nature of the market. So what these oscillators do, they just track the momentum of price. And as you can see, the stochastics is quite overbought, so is the RSI, but the MACD itself is still ticking bullish, which is quite interesting. So although these indicators in and of themselves are predicting or sort of forecasting a little bit of a pullback in the market, I don't think that's the case. Now, these can remain overbought for a prolonged period of time whilst we transition into a trending market. So if we do break above these old resistance levels, then we are set up for this market to trend, which gives us as swing traders some very good trade setups. One thing which does support that in the event that we do break above these resistance levels is the ADX. The ADX is sitting down on the signal line, so it's telling us that there is no trend in effect at the moment. But when we get down to the signal line and the line turns up, as you can see looking back retrospectively, it's a really good opportunity and a signal to tell us that it likes the trend. As you can see also, the commodity channel index, one of my favorite indicators, is very close to that signal line, although it is validating a buy signal at the moment. Again, we always need price confirmation to take out those swing highs. So although I can sit here in this market update for Monday afternoon at the end of close, we are still getting a little bit ahead of ourselves anyway in the way of actually analyzing the market. Here we are at a pivot point. The market can go one of two ways. We've got our two triggers set. All we need to do now is just be patient, wait for the actual price to confirm, and then look for trades in the direction of the overall market. That's a pretty good wrap of the Dow Jones Industrial Average. Taking a look at the S&P, really for the last 4 days, we've been really getting a series of early reversal candlesticks. Now, we've seen dojis, we've seen shooting stars, we've seen again another doji, and today we saw what we call a Dragonfly Doji. All of these are telling us that the market looks waning. However, if you put it into a more practical sense, this could be a little bit of a stair-step pattern that the market needs to rest before it moves higher. So again, you can see our two triggers. We had one at 1,868, another down here at 1,832. Not a whole lot to really talk about on the S&P. It is slowly gaining higher. Volume is quite ordinary. It is quite average, and that really sets us up for, again, what we call a stair-step pattern as the exponential moving averages catch up to price, and it's what's really going to support the market if in fact it wants to continue higher. Again, the oscillators, same picture. We were talking about divergence taking place as we made higher highs and we established that lower low, but as you can see on the MACD, we have actually taken out those swing highs. If we just draw a little bit of a horizontal line here, it is taking it out. So any bearish divergence which could have set up is actually, has actually broken down at the moment, which is quite interesting. So I mean, overall the market is still quite bullish. We are getting a series of early reversal candlesticks, but it's not enough to actually tell us to trade bearish in the face of this bullish market. Here on the Nasdaq anyway, we do have a solid gap which set up, I believe, the difference between Monday's and Tuesday's trading session last week, and until this gap fills, you have to trade in the direction of the open window. So although we are coming down to test this open window, you can tell by the lower wicks here that there are still buyers showing up on these markets, indicating that there still is bullish strength left in these markets. Of course, this picture can change very, very quickly, but until it does, we're still going to trade in the direction of the overall primary and also intermediate trend. Now, usually I go through our top 12 list. I'm going to try and reserve this for our Pivot Point Pro class, which we do over the weekend. Thank you very much for watching this market update for Monday. I'll be back on Wednesday anyway to update us if in fact the market does break higher or lower above our trick is set on the Dow Jones Industrial Average or the S&P for that matter. Thank you very much. Give it a like, give it a comment if you want to ask any questions. Otherwise, I'll see you in class this weekend. Thank you. Goodbye.